Sutton at OrangeQuant.com, and I'm here with your Orange Quant forecasting machine. Hey, and welcome back to OrangeQuant.com. I have held off making forecasts this week because I just didn't have a real clear vision for the day-to-day trades this week. I mean, we did hit it nice and hard and accurately earlier in the week, but when I don't have a clear vision, I just hold off. But now I have something sweet for you, a real treat. One of my favorite type of plays here, and you're about to see how that works out. So here we go, and I'm going to be talking about Monday and Tuesday of next week. Today happens to be the Friday, January 29th is today's date. I forget. Yeah. So we're going to be talking about Monday the 1st of February and Tuesday the 2nd, pretty much. I also, at the end of this, I'm going to have a monthly a chart based or a forecast based on a monthly chart, so hang with me. Now, I don't think I've shown you this chart before, but I did mention in an earlier video this week that the 1st, that is February 1st, Monday, this coming Monday, should mark an inflection based on H205 out of the FLIR 2 ebook. And this in part is how I derived that. You can see the intersect down here at the lower right. That's an intersect on the H205, which you learn how to set up in the FLIR 2 ebook, and it's very simple. Anyway, this was partly how I derived February 1st as an inflection day, and this is based on the daily chart. And these are really sweet kinds of plays. And you can see by that lower red trend line on the H205 how far back I had to reach to get this. And that, I believe, is like last summer sometime that trend line originates. But anyway, when we have long trend lines like that, just a little caveat here. Just the mechanical effect of drawing them, if you're off a little bit, it can cause you to be off at the intersect way out to the right there, and that means that you'll be off a day or two on marking the inflection. But I did look at some other data and was able to support February 1st as an inflection day, so I've got pretty high confidence in this. Now, on to the next chart to show you how to play this. And here we are in close-up of a daily chart on the S&P 500. And I took this snapshot just about 10 minutes before the close, so I don't really know where the close was, but it's probably down there somewhere where you're seeing it now. Today, Friday, that is. And you really ought to watch the video on inflections at the website, OrangeQuant.com, but I'm going to explain here briefly how this should work out. If come Monday, if we get a lower low than we had today, which, you know, here's the low over here, if we get a lower low Monday, that would mark the inflection, and it would mean a reversal upward on Tuesday. Now, there is an outside chance that it will work the opposite way, meaning, and I'm going to draw something here for you to just take a look at. I'm going to draw this in blue. Why not? Let's say, okay, there's your low. Let's say that instead of it doing that on Monday, let's say it traces a path like that blue line to where you have a higher high and a higher low than you had today, Friday. What that would mean is, and I'm going to draw one more line here, let me see, I'll do that one in red. What that would mean is that the Tuesday is going to have a lower high and a lower low than Monday. Okay? So just to be clear, that's how that should work. Right now, my bias, my personal bias on this, and I'm going to get rid of these, is that what we will see come Monday is yet another lower low to continue the trend for a little bit, something like that maybe. And then on Tuesday, a reversal to the upside. I don't know how long that'll last. It just might be a one-day reversal, but a higher high and a higher low. That's my personal bias, but you have to watch Monday and see how it plays out. If you see it going down below Friday's low, then you have some idea how to play this, and you could jump in on Monday on that, and it should give you a ride up on Tuesday. Might want to back this up and replay that so it's perfectly clear. All right. Now here we have the S&P 500 monthly chart, and by the way, you know, I offered to do some forecast, intraday forecasts, you know, for day trading, and I was going to give you guys the inflection points for given days so that you could day trade that the S&P a little bit, or the SPY, that is. And nobody said, hey, yeah, do this. So if I haven't heard from you, there's a place at the bottom of my website where you can contact me, or you can put a comment on this video on YouTube and let me know that you want it. But if nobody wants it, why should I bother doing it? Anyway, here's a forecast for the monthly chart, and I'm showing an intersect. I don't show any intersects of, and this is, by the way, it's the synthetic trend line. I should have made a note of that on here. Okay, there you go. These are synthetic trend lines. I managed to type that in for you. And I'm showing an intersect of the synthetics of April 2010, which means that April 2010 should mark the end of some kind of trend, and I couldn't find any intersects before April 2010, so my bias is that we continue down through April and then we get a bounce. Okay, that's my personal bias. We have to see what happens in the meantime. The other thing that these synthetics are telling us is that these are boundaries. These trend lines tend to be boundaries, or actually price will oscillate up and down over these boundaries somewhat. And so you can, you know, look at that. In other words, this current dip, if it continues to slide south, it probably isn't going to penetrate much through this yellow synthetic trend line. It might go a little bit through it because, as I say, the values oscillate around these, but those are kind of the boundaries. So we'll keep you posted on that. Well, all right, that's all the news that's fit to print.